Hey everyone, Jeff Dorman, Chief Investment Officer at Arca, back again for another edition of That's Our Two Satoshis Live, where we talk about everything happening in the digital asset market, which over the last couple of weeks has been a lot. Hopefully, you tuned in a couple of weeks ago when we were talking about the flash crash, and last week on the aftermath. We're going to continue along that line. Obviously, crypto a little bit better footing right now over the last couple of days. And I think what I wrote about in our blog, for those who like to read that on our website, ar.ca/blog, what I wrote about was crypto's really at an inflection point right now. And you can see it not just in the price action, but in the attitudes and the sentiment of some of the crypto players. And what I mean by that is, this is no longer a new industry, right? The cypherpunks who started the Bitcoin movement are no longer young people, right? This was almost 15 years ago now, or more than 15 years ago. A lot of these young cypherpunks are old guys now, old women, old men. The old school ICO builders and investors from 2017, that was almost 10 years ago. They've had a decade now to reflect on their successes and failures. Many have moved on to other industries or been wiped out by leverage or some of the bankruptcies. You look at where the action is. A lot of it's on Wall Street now, right? The investors are pouring into the ETFs, and in some cases the DATs, rather than directly into the tokens themselves. So what you're left with was, we once had a very optimistic, youthful industry, and they've been replaced by an incredibly pessimistic group of older traders and Twitter influencers. Many of the people who maybe made a lot of money in 2017 and have big social media followers haven't really done much since. They now make more money on social media than they do actually trading crypto. You have the combination of the PTSD from 2022, a horrible predatory token launches, and then you add on that the flash crash of a couple weeks ago, and you can see why people who have been in the crypto trenches for a decade are just not that optimistic anymore. Perhaps it's no surprise then that almost everybody was bearish last week, talking about how the market was going to keep going, and market makers and market neutral funds were taken out in the flash crash. Nobody believes anymore. Meanwhile, we were out there saying this is likely the bottom. A couple everybody's bear posting while we're at the bottom of the market. So, and we felt that way because crypto's not dead. It's just an inflection point, right? The new wave of crypto investors are not people who were burned by crypto over the last 10 years. They're not burned out from the ups and downs of these past couple of cycles. They're as optimistic as ever. These new investors are both sophisticated TradFi firms and funds and banks, as well as the new retail Robinhood crowd. As Robinhood kind of takes over Coinbase in terms of energizing retail with tokens available to trade. So this new wave of investors is way bigger than anything this industry has seen before. They're conditioned to buy dips like they have in the equity and bond markets forever. They don't just immediately turn bearish the second prices go down. They don't live on crypto Twitter reading the bear posts from the 2017 one trick pony glory day social media influencers. In some cases, some of these new investors are still being steered the wrong way by the quote unquote exchanges who are really just brokers who cater to VCs and founders rather than to secondary buyers. And it's on us and everyone in this industry to do a better job educating these new investors on the differences between something like a Bitcoin, which is clearly a commodity or a currency, versus something like a layer one protocol smart contract token versus something like a hyperliquid or a pumped up fund, which is a real business with billions of dollars of revenues. So we have to do a better job educating away from these original pessimistic players who, in my opinion, confused more investors than they did help. But that being said, this new wave of investors is still really optimistic about the industry's growth, and they're trying to find any way and every way possible to invest in the growth of blockchain. Whether that's through the equity of some of these public companies or the equity of some of the private companies, or even into the tokens themselves, whether that's via ETFs or directly. So as I wrote 2 weeks ago, none of these new investors were harmed at all by the flash crash, right? They didn't use leverage on decentralized perp exchanges. Instead of trying to play detective on who got burned and why this market's going down, they simply bought the dip when prices were lower for no reason. And what I'm getting at is like the majority of the signals that used to work 5 years ago to understand momentum and price action in crypto just don't work anymore, right? Coinbase used to be the only game in town, for example, and everything that Coinbase did mattered to the market. Now Coinbase can list a token and nobody even cares, right? Coinbase used to be at the top of financial app downloads every week and activity. Now they're barely top 30. Robinhood consistently crushes these guys, as does all of the action on ETFs. So, and that's not a bad thing at all, right? It's a sign of the industry's maturation that some of the early signals in crypto that used to work just don't work anymore because it's a bigger, broader investor base. So what I'm getting at, tying it all together here is like, why was I so bullish when the rest of the crypto world was so bearish, and I continue to be bullish? Is that any first year analyst could have looked at news flow and objectively realized that it's all bullish, right? JP Morgan calling for the end of QT and the market pricing in 100% certainty of two more rate cuts starting this week and into December. The crypto market structure bill is moving forward. A shout out to Galaxy Digital, who did a really nice piece talking about why the odds of the Clarity Act getting passed went from 25% to 60% over the last week because of some constructive conversations. Hyperliquid, the token, one of the best constructed tokens ever created, got listed on Robinhood last week, even though Coinbase and Binance still don't list Hyperliquid, right? Showing that again, good assets can be listed on good brokerage accounts and not just, being beholden to these giant crypto exchanges and their whims. President Trump scheduling a meeting with Chinese President Xi and Treasury Secretary Bessent saying that China and the US have reached a framework. Corporate earnings have been absolutely fantastic thus far in the third quarter. Actually, one of the best quarters ever. They're delivering the third highest EPS beat rate and highest revenue beat rate for all quarters since 2001. Right, so this is one of the best quarters for corporate earnings in 25 years. You have just an onslaught of new entrants into crypto from JP Morgan, Charles Schwab, Fidelity, and other top banks and brokerages. Every week we have a headline about their adopting crypto. Global stock markets continuing to bounce back, reaching all-time highs yet again. Again, you wouldn't need more than 2 weeks of a financial or economics education to realize that last week was bullish. And yet so many in the crypto world were looking for the worst possible outcomes just because it took a few days to work out the kinks from the flash crash. I mean, literally every single chat and discussion I've had over the last week is, yeah, everything's bullish, but price isn't reflecting that, therefore it's bearish. That's the tail wagging the dog. That is a dumb argument. When setups are obviously bullish, they usually are. There's just no need to overthink this. And I'm not entirely sure what's going to make the majority of crypto assets go higher. Right? Most crypto assets are horrible. Right? They're massively inflationary. They don't represent real underlying businesses. Even though there's a high correlation in the crypto space, correlation and magnitude are two different things. Right? On a day over day basis, maybe everything's up and everything's down together. But when the good tokens are up more on good days and they're down less on bad days, you start to really have dispersion over the course of a market. And that's what really segregates the haves and the have-nots. And you can see that happening this year, right? The majority of tokens, more than 50% of tokens are down 50% or more year to date. And yet a handful of really good tokens are up in the 20 to 100% range year to date. So this hasn't been a broad bull market, and it probably never will be a broad bull market. And again, that's really healthy. You don't want the worst assets to be the ones blindly going up and making everyone rich who hasn't done any work. I understand why crypto natives are bearish when most of the assets they own are down. But again, that's a good thing, right? Most of the top 50 altcoins are terrible assets. As my colleague Topher McPherson pointed out the other day, like, have you ever actually looked at which assets appear on the Binance top 50? It's assets that I've never even heard of and absolutely have no value and shouldn't be top assets. You want to differentiate between good assets and bad assets, right? Good assets being the ones that are built correctly with real underlying businesses and real tokenomics versus the meme coins and other, L1s and L2s that are inflationary and have no actual activity. So yeah, we might lose some of the crypto OGs in the process. We've already seen tons of articles and wallet movements from the Bitcoin OGs who have been selling, but that's good. These crypto OGs who are sad and depressed and angry are being replaced by investors who will help take this asset class to the next level because they'll actually differentiate and buy decent assets. So if this upcoming week continues to have the upside legs that we anticipate, it could wipe out yet another group of pessimistic bears while further differentiating between the haves and have-nots. And that's what we're looking for. And that's why we've been excited about what we've seen so far this week. Again, that some of the better assets are the ones that are moving higher at the expense of others. And we think with the macro setup, this is poised to go higher into the year end. So we'd love to hear the bear case from anyone who disagrees with me. But again, I think sometimes you don't want to fade the obvious, and the obvious is crypto has lagged for a couple of weeks and is primed to catch up to the movement we've seen in other risk assets. So that's it for this week. That's our two Satoshis. Please feel free to go to our blog and read the actual write-up with all the charts supporting this evidence, and we'll see you next